Hello, everyone. This is Elaine Combs, teacher realtor, or Elaine Vu. I have here Daniel Aponte. He is the lender, and he's going to walk through the various loan programs for first-time home buyer as well as investor. So we're going to start with one of my listings so we can work with real numbers, just so you can understand the details of all the numbers. This is my listing for 373 Palo Center in San Jacinto. It's a 7 bedroom, 4 bath. It has 2 bedroom and 1 bath downstairs, and technically it's a 6 bedroom, 3 bath upstairs. However, the owner didn't need the seventh bedroom, so he had the builder made the seventh bedroom as a huge entertainment room upstairs. Anyway, and the price just reduced by 16,000 from 675 to 659. And I have here Daniel going to walk through the various loan programs so you can see the different options for a first-time home buyer. Okay, Daniel, can you see that?
Absolutely, yes, I can see. Hi, Elaine. Hi, everyone. Like Elaine said, the price is 659,000, and you can purchase this home in many different ways. You can use a normal conventional loan with 3% or 5% down payment. You can also apply for a VA loan, or you can also apply for a FHA loan. In addition to that, you guys can also apply for a down payment assistance. The flyer that we have up on the screen is the Cal HAFA or Cal HFA with the down payment assistance program. That one, on a conventional loan, you can get the assistance up to 3%. With FHA loan, you can get 3.5% for down payment assistance. And the reason why we have this flyer up front here is because the interest rates for those two programs are a little better. On the FHA loan, as of Friday, the interest rate on that program was at 5.625. The conventional loan was at 5.75. But if you guys need a little bit more money, we can do additional down payment assistance to purchase these homes. Of course, you can get up to 2% or 3% more. And the only thing is that the rates are a little bit higher. But this program, if you take a look at the total cash to close, this is not including any type of seller assistance. I don't know, Elaine. Maybe Elaine, you can explain that to the audience what the seller concessions are.
Yeah, so basically, depending on the purchase price, the seller can offer assistance for down payment or for assistance of closing costs. So that could even help you to bring down your money even less. Because I've actually helped someone who bought a home, Michelle, which Daniel, you also helped her, and
That is
she
right.
only got, I believe, only like 4,000 something to close the deal to purchase
That
the
is
home.
correct.
So yeah,
Yes.
so with the assistance of a seller, then you don't have to put as much down.
Absolutely. Yeah. In addition to the down payment assistance, you can combine the down payment assistance with seller concessions. Of course, that's negotiable, right, Elaine? Depending on,
Correct.
you
Yes, it's
know,
all negotiable.
absolutely, depending on the negotiation. But you can purchase, this home with any seller concessions, 24,000 approximately, of course, $24,000 on an FHA loan or 37,000 on a conventional loan. Like we were explaining to you before, you can get additional down payment assistance. The only difference will be is the interest rate. It may be a little bit higher. That can have a different total monthly payment. Also, Elaine, these payments that we have, those are true payments. We calculated the property taxes and the homeowner's insurance, almost to the penny. Okay. So
Mhm.
that way they can see what the total monthly payments are. Those payments are including everything, property taxes, insurance, and the payment for the loan. Okay.
Uh, I think it's amazing that you put so little down and you be able to purchase a home. And nowadays the rent is so high, with a 7 bedroom, that's going to be outrageous. So why rent when you can buy, right? So
Absolutely.
yeah.
Yes.
So my question here, Daniel, because I'm sure a lot of homeowner or people who rent would want to know is, how would they know if they qualify? Like, what kind of income must they be making, and maybe like what is their FICO score need to be, or the debt to ratio? If you can explain that in details, because I'm sure people who are renting, they need to know if they qualify, for a home like this. What if their income would need to look like, or what their debt in, you
Sure,
know.
sure. Yeah, absolutely. Yeah. The process of the process of applying for a loan, or the qualification process, is very, very, very simple. Um, you need to have a 2 year history of employment. It doesn't have to be the same job. You can have, more than one job in the last 2 years. And even if you have a gap of employment, we can always go back to a previous job and have a 2 year working history. Okay. So that is one of the requirements. The credit score requirements for this type of program, this is the Cal HAFA FHA and conventional. And the minimum FICO score for this program, the minimum middle score is 640. We also have another down payment assistance. It's called the GSFA. And that one, the lowest down payment you can have for the down payment assistance is 620 FICO scores. Okay. And the process, like I said, is very, very simple. You just need to provide your income documentation for the last 2 years. Assets, it can be your own funds. You can also get a gift from a family member. And in addition to the down payment assistance, and then of course any seller concessions, you can combine all your assets to have the minimum the minimum funds required to purchase a home. As far as the income goes, like what is the income required, depending on the payment of the home and depending on how much debt you have. So I'm going to try to explain this to you in very, very simple language, Elaine, because sometimes people get a little confused, but it's very, very simple. Um, this particular program, your house payment cannot be more than 45% of your income, your total gross income, if your credit scores are less than 700. And then if your FICO scores are over 700, we can go all the way up to 50% of your income for your house payment and your total debt. Okay. So those are the requirements. So, of course, the income is going to have to be calculated, of course, right? Depending on what type of job you have, or if you're retired, you get any type of disability or any other income that you get. We have to do the income calculation, Elaine.
So, Daniel, can you give an example? Like, for example, to qualify for a home like this, what would an example of a number of the income need to be in a debt, just so that
Sure,
you can qualify for something like this, just so in real
sure,
numbers, so people can grasp, okay, that's me, or no, that's not me. I
absolutely.
need to, yeah.
Absolutely. So let's say, for instance, you meet all the credit requirements and all those requirements. 45%, $4,977 a month. Uh, if your income is $10,171, $4,977, that's 45% of your income. So that is the minimum income requirement for this type of loan.
So, in
Of
other
course, that
words,
if you
they
have,
have to make at least 10,000 or more, pretty
yeah,
much.
10,000, let's say 10,200, 10,171. So if $10,200, that's your income, that is, then you may be able to qualify for this home. Of course, depending on how much debt you have, right, Elaine?
Mm-hmm.
So, for example, if you have a car payment, some credit cards, some student loan payments, anything like that, then your income may have to be a little bit higher. Okay.
Mm-hmm.
And just for everybody to know, it's combined income, right? So if you have a husband, wife, maybe somebody else applying for the loan, we combine all the income and we use gross income. Okay. The only time we use net income is when you are self-employed. But if you are an employee of a company and if you get, W-2s, we use your gross income, the total income. We don't just use your net. We use the total income before all your deductions.
So that's wonderful. That means,
Yes.
for multiple adults working, there are going to be
Yes.
multiple incomes, so they can easily qualify for a house like this with,
Yes.
7 bedrooms or 6 bedroom plus a big bonus, or even six, maybe like at least three, four, five working adults can easily qualify for something like this.
Absolutely. So I'm going to give you an example. Let's say, for instance, you have three adults making, I don't know, $20 an hour, right?
Mm-hmm.
So it's 40 hours a week. That's about $10,400. So I just did the math. So if you have
Wow.
three people making $20 an hour, right? And
Mhm.
they're working full time, 40 hours a week. That's approximately $10,400 a month in gross income. So those three buyers can purchase your listing. Yes.
That is awesome. Wow. See, that's not that hard to qualify after all, huh?
No, no, no.
That's
And like
awesome.
you said, you and I have done business in the past. We've
Mm-hmm.
done some first-time home buyer loans, and
Mm-hmm.
we this a lot of people also, Elaine, have the assumption or the perception that these loans are very difficult. They're not, right, Elaine? We
Nope,
close
not at
your
all.
escrow in less than 30 days. And so
Mm-hmm.
they
Yeah.
they people apply, and it's the normal process, and you
Mm-hmm.
can close escrow within a normal 30-day escrow. It's a
Yeah.
very, very simple process.
Yeah, Daniel and I, we did work a deal helping Michelle, a single mom by herself, and she was able to purchase a house and just
Hmm.
one income, and she only
Absolutely.
needed to bring in like 4,000 something to close the
Yep.
deal. So that was
Yep.
such a
Absolutely.
an easy. You would never thought that you can bring in so little. In that income, of course, combining the seller credit and the lender credit. And so it is possible to own a home. Why rent when you can own a home? So,
Absolutely. In
mhm.
addition to that, I don't know if you remember, we don't want to disclose too much, but she had funds, plenty of funds. But once we explained to her how she can apply for a loan with a down payment assistance with a very, very, very good interest rate, she decided not to use her funds. Why use her funds if she's going to have a very, very good loan? So it's a very good way to buy a home,
Mhm.
Elaine. So
Okay, very good. And then now
I
we're
was
going
gonna
to
explain
switch.
that to you. The
Yeah.
the assistance that you get on these programs, it's a loan. It's
Hmm.
it's a it's a second loan against your property. The payments on the assistance, depending on the sales price. If you get a conventional loan, you get 3% of the sales price. If
Hmm.
you get FHA, you get 3.5% of the price as a down payment assistance program. You don't have any payments to that loan. Okay.
Hmm.
It's a second loan. It's a 30-year loan, just like your normal loan. And it's at 1%, and it's a simple interest loan. It's a very, very small interest that you pay per year. It's a simple interest loan. And the buyers don't have any payments on these loans, on
Mm.
the assistance.
Mm. You know what, Daniel? I forgot to ask you about the Dream for All. The this
Sure.
For the first generation that the second loan 20%.
That is correct.
So can you explain about that Dream for All with the second loan of 20%?
Sure, absolutely. Yeah. So you can also apply for the Dream for All. Uh, it's the same agency that they call HAFA. You can apply and get up to 20% of the sales price for the Dream for All. And again, it's a second loan, and it's a 0% interest, that 20%. It's a second loan, it's attached to the home. It's a 30-year loan as well. Is not due until you pay off your home, or you refinance, or you sell your home. You have to pay back that 20%. The only thing is that you have to pay back any appreciation from the time you purchase your home to the time you sold your home. You have to pay back that 20% of the appreciation. Okay. And
So can you
on this one,
explain that appreciation? So if you, let's say, like, is there a time limit that you have to hold the house before you
no,
sell it, or how does
no,
that
there's
work?
no time limit. You can buy the home, you can sell it. I don't know. Let's just use an example, Elaine.
Hmm.
Let's say, for instance,
For example, this house. So
okay, okay. So let's say, for instance, on this house, the price of this home is, let me double check again,
659.
659. So on this one, so 659, 20% is $131,800 that they can get that money for closing costs and down payment, or just down payment. And if you get the seller concessions to cover some of the closing costs, or the buyer can pay their own closing costs, but you can use $131,800 for the assistance to purchase the home. So let's say, for instance, you have a client that buys your home and they decide to sell the home. I don't know. What do you think, Elaine? 10 years from now, 5 years from now, right? And the home goes, what do you think? Let's say 5% appreciation. Let's see, 659. And let's say, for instance, that home went up, let's say 15%. Okay. So now the home is $98,850 more, right? So 650. Okay, let's do the math. 659 plus 15%. So now the home, it's you can sell the home for 757,850, right? So they have to pay back that 20%, and they have to pay back the 20% that they got for the assistance and 20% of the appreciation. So 659, 757, 850.
So you're saying they actually get the 20% down payment assistance is 131,800.
Right. That's what they
So,
And
get.
so I have a
and
quick, does that eliminate if there was a PMI?
That you're absolutely correct, Joseph. Yes.
Okay.
So
And
if you,
then if that house went up $100,000
yes,
in the period, so you would owe like that's $20,000 is all they're asking for.
that is correct. And in
Oh, wow.
addition to the
To the
assistance,
131,000, yeah.
exactly, yes. In addition to the assistance that you receive, the 20% assistance, plus if the home went up $100,000, you pay back the $20,000 in addition to the assistance. The
Yeah, so
initial.
that's like the price that the bank would get for letting you borrow the 131,000.
Correct. But if you think about it, that's a great program because during that
Yeah.
time, so let's say, for instance, you own the home for, I don't know, 5 years, 10 years.
Mhm.
Remember, you didn't have a PMI, right? The monthly
Mhm.
mortgage insurance, or you didn't have any payments for that assistance. So that you're saving that money,
wow, you mean
Mhm.
no payment for that 131,800?
There are no payments. It's
No
0%.
interest rate either?
No interest rate on this on the assistance. No. Yeah.
Wow. No interest rate and no payment until they sell it. And then
Until they
once
sell it.
if it
Or
appreciate, then they
yes,
pay 20% of that
of
appreciation.
the appreciation, right?
Nice. Now my question is, what if it doesn't appreciate? What happens then?
If it doesn't appreciate, you still have to pay back the money if you
Yeah.
sell the house.
Yeah,
Yes.
I'm just saying, like, let's say I'm just, playing just in
Yes.
case. So let's say what if it stays at 659? I'm just saying.
Yep.
So then they just have to pay 131,800 and
That's
that's
right.
it.
That's it. Yeah.
Wow, that is such a great program.
Yeah. But remember, this program is great because it's kind of like borrowing money, right? Saving money at no interest because you're not only you're borrowing the money, but you're reducing the payment because you reduce the loan by 20%. So you're saving that money too. Remember, even if the home doesn't appreciate, you save that money that otherwise, if you didn't use this program, you would be making payments to.
Yeah,
You know,
that is awesome.
So
Wow.
so who qualifies for that particular type of loan?
it's a conventional loan, right? And again, we use the same qualifications. We have to check your income, your credit, and you have to be a first generation, first time home buyer, right? And only one of the buyers have to qualify for that. Not all of them have to have that. And we don't do the approval. We just do the process of your loan application, and we send it to CalHAFA, and they approve that program. And once you get approved, Joseph,
Mhm.
Your application goes into a lottery, and they pick the winners of this program. So we
Okay.
don't do that. Yeah. The difference of that one is that it goes into a lottery. The difference on this one's the ones that we were talking about right now, the normal down payment assistance with the 3% or 5%, sorry,
Mhm.
3.5% or 3% down payment assistance. Those don't go into a lottery. If you qualify, you can buy a home now.
And then that's the 3%. Was that the same thing on the 3%? It's also zero interest and
No, this ones have a 1%, but it's a
okay.
simple interest, but the payments are deferred, so you don't have any payments. So I'm gonna give you an example. At 659,
Okay.
so 659.
Let's
Let's say,
talk
for
through the
instance, you
numbers
get,
that you did. Here it
yeah,
is. Yeah. Which one do you
it,
want to do? The first, second, or the
the
third?
let's do the conventional one. So if you do the 3% conventional, you get a 19,750. It's over there, right on the screen. That's the second loan. And
Mm-hmm.
the interest rate on that one, as you can see, is 1%. So 1%, um, so 19,750. So it's 1%. That's $197.70. That's a 1% interest that you pay per year. Okay, that's a 1% per year. So it's $197.70 per year that you pay in interest.
So you're saying $197.70 per year, divided
Yeah.
that by 12. So
Yep.
technically each month is only $16
And
for 48 cents.
47 cents. Yeah.
That's
That's an
it?
interest. Now, yeah, but remember, they're deferred. So you're not obligated to make any payments. So if you don't make any payments, the 197, not $197.70, it's accumulated into the loan per year.
Ah, I see.
Yeah.
So that will also help you to, purchase without having
Yes.
money down.
Exactly.
And for this particular program, do you have to be, have to keep the house a certain amount, like there's a certain amount of
You
year
just you
restriction?
it These programs are for first time home buyers, Elaine, and you have to occupy the property as your primary residence, right?
Hmm.
But if you decided to sell it, you can sell it anytime you want. But they are designed to be to help first time home buyers, and
Mhm.
they have to occupy the property.
And so, is there a time period that they have to occupy, like 1 year, 2 year, 3 year, 5 years, 7 years?
As far as I know, they have to occupy the property. It's
Yeah.
a for first time home
But
buyers, and
yeah,
you
like
must
like how
occupy the
long?
property.
How long do they have to occupy the property?
I'm gonna get back to you on that, but as far as I know, the trial training that I have is they must occupy the property
Okay.
all the time, unless I'm assuming something happens, you get transferred to another state,
Hmm.
something like that. But I'll get back to you and let you know on that.
Okay. Now the
But as
other
far as I know, they
question.
have to be for first time home buyers, and the definition of first time home buyer is somebody who has not owned a home in the last 3 years.
Okay.
And
So
and and
yeah.
all the buyers on this, sorry about that. All the
Yeah.
buyers, they must occupy the property.
Oh,
They don't
okay.
accept co-signers or non-occupant co-borrowers or co-signers.
So all the buyers has to
Must
be
occupy the
homeowner
property.
occupant. And
Yes.
but if they are co-signer, would that be okay or not?
Not on this one. The other one that I was explaining to you, we don't have the financial sheet in on the screen. There's another program that on that one, the down payment assistance, you can have a co-signer. Not on
Oh,
this one. Yeah.
so there's other program that have
There's
a
another down payment
co-signer.
assistance, yes, that you may have a non-occupant co-signer. Yes.
Oh, okay. That would be interesting to find out because a lot of first-time home buyer they would need a co-signer. So
Yes.
that would be a good one to do, just to maybe we'll do another one for that with a co-signer because they could have like a parent or uncle or aunt or
Hmm.
sibling that can be co-signing with them.
Yes.
And that might work for a
Yeah.
lot of buyers.
Yeah. And the same rules apply, just like when you apply for a FHA loan or a conventional loan. We have to use the debt of the co-signer. Sometimes if they own a home, right, if they have additional debt, not only we use the income, but we also have to count all the debt from the co-signer.
Okay. So now the other question, I have people who are asking about the 20%. What's the process to apply for that? And how long is the process? But you said it's a lottery. So have you
Well,
even,
that's a lottery once you get approved for, once you're able to qualify for the program, right? I mean, we process the application and then we send it to Calhafa for final approval. That's the way it works.
Have you
But
ever
the
done any?
process, I'm sorry?
Have you ever done any?
Yeah, the only thing is I haven't had one yet. I'll be honest with you. I haven't had one yet that meets the qualifications, but people have been asking me about that program. I mean, not, I don't want to say every single day, but I've been getting a lot of questions about that
Mhm.
program.
Yeah. So what is the process to apply for that? I mean, how?
The same process. Buyers have to provide their financials. All the assets, income. We have to run the credit. It's the same process as any
Mhm.
other loan, just the same way.
Uh-huh.
And once we have all the paperwork, we send the application for final approval. And then
Uh,
once they get approved, it goes into the lottery to see. Not
uh,
everybody's gonna be pick, as a lottery winner. And it has nothing to do with us. It just
mhm.
goes into a lottery.
I see. Is there like a deadline? Because I have a client asking about this. Is there a deadline that you have to apply for this, or is there a
No, no.
timeline?
I mean, as of right now, as soon as once they run out of money, then that's it. We
Mm,
can apply.
I
But as
see.
of right now, I mean, I haven't heard anything yet,
Uh-huh.
Elaine. Anyone can apply for this program.
And then what cities do they cover? This is a
Everywhere in
question.
California, anywhere in
Um,
California.
and do they allow brand new homes or resale homes?
As far as I know, yes.
Hmm. And is there like a price limit? Like
No, as long
under
as you
700,
meet
under six, under five?
it. No, as long as you meet the qualifications. Of course, there are other qualifications, but as long as you meet all the qualifications, there's no. But that's what they said, up to 20%.
Mm, that's
Yes.
quite interesting. Um, okay. So those are good questions.
Yeah. So I think nowadays, Elaine, I guess people think that they have to have so much money, right, to buy a home. You have to have
Mhm,
the perfect credit to buy a
mhm,
home.
mhm.
That's not the case.
Right.
If you think about it on this one,
Mhm,
the Calhafa within my home, the down payment assistance. I mean,
mhm,
640 FICO score can get you in a home.
mhm, mhm,
And your listing. They
mhm.
can buy this home with,
Yeah.
what is it, 24,899, and let's say for instance you get a $10,000 or $15,000 seller credit.
Yeah.
You can
Hmm.
buy this home with
Yeah.
with you know ten
Easily.
$15,000,
Hmm.
as long as you meet all the requirements. I mean, it's not very difficult. I think the
Hmm.
sooner you buy a home, the sooner, as
Hmm.
I'm sure you
You're building
probably,
equity toward
you start
yourself.
building equity,
Mhm.
right? The sooner. That's why I
Yeah.
always tell all my clients, the younger the better. I mean, it's never too late,
Hmm.
but the sooner you start,
Hmm.
is the better.
Yeah. And then
So
let's just, yeah.
I've done loans for people that I've been doing my job, for 33 and a half years.
Hmm.
And I've done loans for people that bought homes, in the 90s and in the early 2000s. And, you see the market goes up and down. So many things happen in the market, but as long as you buy something you can afford, right?
Hmm.
And you don't go crazy. You buy within your means,
Hmm.
you hold onto your property.
Hmm.
That is your wealth, right, Elaine? That's how you
Hmm.
build. That's what a lot of people build wealth.
Hmm.
And you hold on to your property instead of renting. I mean, you do the math, right? You pay
Hmm.
$3,000 a month in rent.
Yeah.
That's $36,000 a year that you pay in rent.
And then
The money
especially
is
if you have
is
multiple families each renting, that's probably they rent a
absolutely.
lot more than they're paying the mortgage, you
Yeah,
know?
yeah. And that
So
money goes to
it's like
waste.
if they, just kind of stay together, save up, and they can easily purchase this and save money instead of just like renting here, renting there, all the money just out and nothing comes back. So
Absolutely.
and
In my in
that's how my family did it. We stayed as a big family. We stayed together and we started, with 9 kids and parents. That's 11 of us in a house. So that's how we started it. And we were able to save up and then eventually we branch out and we get our own
Yep.
places. So,
Absolutely, yeah. You're an example of many of my clients. I've done loans for clients that they brothers and sisters and
mm-hmm,
parents, they all get together.
yeah,
Yes, at the beginning, it's a
mm-hmm,
sacrifice, of
yeah,
course, but
mm-hmm,
they buy a home and in 10
mm-hmm,
years, the
yeah.
home is worth a lot more money, and
Yeah. And then you
and they
just keep
sell it.
doing and then you
Yeah,
can expand
they
after
each
that.
get
Hmm.
yeah, and as you get older, also you get better jobs, right? You go to
Mm-hmm.
school, you get a better
Mm-hmm.
job, you qualify
Mm-hmm.
for a better home
Yeah.
versus not buying anything, right? If you
Right.
don't buy
You just
anything and you
toss
wait
all
10
the money
years,
away and you don't get to keep
yes,
anything.
everything is more expensive.
Mm-hmm. Yeah.
So that's what
Let's
we tell
switch gear
people.
to investor. Let's just look
Yes.
for the investor real quick. We have a few minutes. We're gonna check for the investors, especially those that have money in the bank and or people who are looking to move back to California. This is opportunity for them.
Yeah,
So let's just look for the investor.
sure.
Okay, so you want to explain for the investor?
Sure. Same thing, $659,000. And we did a 25% and a 30% down payment, right?
Mm-hmm.
Again, this is not including any seller concessions, right? But if you put 25% down payment, you're looking at approximately, if you go a little bit, yep, $3,900.
Oh, sorry.
Yep, no, you're fine. You're fine. $3,900 a month. That's the total payment.
I don't know what.
Or you put 30% down, you get not only you get a better payment, you also get a better interest rate. You're looking at about $3,600. I'm not too sure, Elaine, how much you can rent this home for. What do
This
you think the
home
rents are
can on the low side is 3738. That's a low side, but
on the low side?
easily
Okay.
up to 4,000. So 37 is on the low side, 4,000 is easily.
Okay. Okay. So it looks like on either one, you may be breaking even on a 25%. If you put 30% down, it looks like you may have some positive rental income, Elaine.
Hmm. Yeah,
Yeah.
and this is something, people who are looking to possibly move back to California, that
Yeah.
would be a good option. And so that's something to think about. So,
Absolutely.
okay, so we will probably, I'm going to have you do the next property with the cosigner for the other property at 537 Peregrine Lane. I mean, that smaller one, the five
Okay.
bedroom. And I'm gonna have you do the flyer with the cosigner because then that way people can see because a lot of first time home buyers they cannot qualify by themselves, but with the cosigner they can qualify, right? So
Absolutely.
so I'm gonna have for the next video. I know we're running out of time. We only have a minute something left, but for
Sure.
the
Sure.
next video we can focus on that with the cosigner. How does that sound?
Absolutely, absolutely, Lane. Thank you very, very, very much for having me. I know we're running out of time, but the message to all of our buyers, all of our clients, or everybody, right? Don't wait. The sooner,
Mhm.
the
Right.
sooner you buy, the better. Yes,
Yeah.
Joseph.
So
No,
yes,
thank
the
you.
sooner and yeah, so basically yeah, so I will just we're gonna wrap it up and we will do another video for the other details um and if I just wanted to close here and if anybody feel free to subscribe to my channel and I also have other videos including healing body, mind, and spirit and other things that I've learned and I'd like to share as well. Okay. All right. Thank you so much, Daniel, for joining us, and we
Thank
will
you.
have you for the next video for the with the cosigner. Yeah.
Thank you. Be well. Thank you
All
very
right.
much.
Thank you.
Thank you.